Hello everyone, and you're watching Bitcoin Bubble news channel. It's interesting to see that M2's growth has gone from negative to positive, but is still very low compared to the past. The word is that inflation is likely to go down. The CPI is on the left side of the scale between 1% and 2%. And we wouldn't be as we saw in 2014 and 2015 and even before that in 2008 and 2009. We think that will happen again and the Fed will start to loosen up a lot before the end of the year. Analysts had expected that the US would add 142,000 jobs in August, but that's not what happened. Instead, employers cut jobs by almost 20,000. This was like how job growth was slower than expected in July. However, the unemployment number went down from 4.3% to 4.2%, which is different from July. Because of this, people are worried about how the Federal Reserve's interest rate hikes will affect the economy. They think that the world's biggest economy could still be affected. Some economists are still hopeful that the Federal Reserve can pull off a soft landing, but most agree that this is a very important time for the US economy. At its September meeting, the Federal Reserve is likely to make choices that will either stabilize the economy and stock market or cause more chaos. With the Fed raising rates at the fastest rate in history, the economy will need to be able to handle the tightening cycle without major problems. In the No podcast, CATHIE Wood, founder and CEO of ARK Invest, talked about the US economy and warned that it is already in a rolling slump. She said that the US could face another crisis like the dot-com bubble or the 2008 financial crash if interest rates aren't cut quickly, starting with a drop of at least a quarter point. But Wood pointed out that the rise of disruptive technologies like AI and robots could help keep the world economy from collapsing and get it back on track for growth, which could add trillions of dollars to the world's GDP over the next 6 years. If you want to see more crypto and Bitcoin news, check out our daily 5-minute crypto email before the rest of the video. It's a great look at on-chain crypto data and splits, and the best part is that it's free. In short, they'll talk about what experts think will happen, how on-chain crypto data is broken down, and any breaking news you need to know. To become a better crypto trader right now, click the first link in the description and enter your email address. Over 50,000 other people have already done the same thing. Since it's election season, there is definitely no progress being made in Washington. The government deficit as a percentage of nominal GDP is still over 5%, as you can see. This is a very high number if you think we are not in a slump. Then it makes more sense if we're in a slump. When the economy is bad, there is a lot of spending that goes against the normal flow of money, like on food stamps and the social safety net. But one thing we know for sure is that all of the candidates are focused on lowering this gap. And hearing the different ways has been very interesting. Some people would say cuts in spending. Some people would say tax hikes. As you might expect, we believe that the best answer is a mix of less spending and more economic growth. To lower a gap to GDP, it is best for the economy to grow. We think that once this moving recession is over, we'll finally be able to say that it is a recession and that we've been in a slump for more than 2 years. We believe growth will win out. We also talk a lot about the huge growth opportunities that come with the new technologies that are being developed and are now ready for prime time. That Elon Musk put up his hand and said, with government efficiency. I find that very interesting. What he did at X will stand out to you. His job at X hasn't changed at all since he fired 75% of the staff. Its advertising hasn't gotten any better, but X's technology success has gotten even better. It's becoming more like TikTok in how it can use AI to find out what people are interested in. If he can do that at Twitter, I don't think he can do it in the government. But I do know that he will use technology to help the government, and I think that anyone who leaves a government job will not be replaced. This trend of people leaving their jobs might speed up if more interesting or better yet more useful jobs open up in the private sector. And by that I mean that the government still does a lot of things on paper, and with a lot of red tape, technology and agentic AI could help solve these problems. I believe that is an interesting situation that could really help fix the problem of too much government right now. Recent reports say that US consumer prices only went up a little in August. However, experts are worried about persistent underlying inflation because housing and other service costs have gone up. This makes it less likely that the Federal Reserve will cut rates by more than a quarter percentage point next week. Senior economist Ben Ayer said that even though inflation seemed to have leveled off, There are still problems in housing and services that need to be fixed. This is likely why the Federal Reserve chose a small 25 basis point rate cut to stop prices from going up even more. According to the Labor Department's report, the Consumer Price Index went up by 0.2% in August, which was in line with what experts had predicted and with the inflation numbers from July. The cost of foods went up by 0.1%. It was a little less than the 0.2% rise seen in July and June. The CPI rose by 2.5% year over year, which was the smallest yearly gain in over 3 years and a 0.4% drop from July's rate. CEO of ARK Invest Cathie Wood said that even though price pressures have eased, people will feel even better when the Federal Reserve starts cutting rates next week. She's sure that inflation won't be a problem in the long term, which means the Fed could do another round of bold quantitative easing, possibly making prices go up and the economy grow. And you can see that the yield curve had been flattening and then inverting. It has been doing this since 2008 or 2009, but you can see what happens when short rates drop below long rates after an inversion and a move back above zero. In general, what does that mean? It means that the economy is bad most of the time. You can see that the lines in shade are going down. You can see that we turned around. It's not shown here, it's hard to see. We went into inversion for a few months in 2019 without knowing about COVID. We'll never know if the inversion was a sign that a slowdown was going to happen. But there was a slump here in 2008 and 2009. Moved up, it meant that a slump was coming. We were in the middle of a slump when tech and telecom were going down. We were in a slump when S&L went down. In order to stop inflation, Volcker tried to starve the economy of money while we were in a slump. So it looks like we're in a recession and have been for a while. Based on some measures, I know I've been saying this for a while, house prices dropped right away and are now in a depression. But we think that is a rubber band getting longer. That's why we don't think this slump will be too bad. It could end pretty quickly if we can bring down interest rates and get the cyclical parts of the economy going again. There are a lot of people waiting in line, especially for houses, both new and used homes. On the next page, I'll show you what I talked about earlier. This is the difference between non-farm and home jobs. Homes are in green and places that aren't farms are in purple. You can see that non-farm job growth is still around 2% year over year, which is pretty normal if you look at past trends. But if you look at the amount of jobs held by households, that growth rate from one year to the next is now zero. That fits with the idea of a decline better. And the household numbers are much more accurate than the non-farm payroll numbers at turning points because they don't get changed like the non-farm payroll goes through. So that change is here. So you can see it is important to note that the job rate is only changed once a year. You can also see how big this change was. There were over 800,000 jobs lost last year, even though the non-farm payroll employment numbers were reported as high as 250 jobs per month. The real number was in the low 100s after these changes were made. To sum up, don't put as much faith in non-farm payroll numbers as you do in family numbers. Next, you can see that the number of job openings is going down quite a bit. Companies aren't firing a lot of people right now, but they also aren't hiring either.